139 points. Oliver Slope is with Blue Line Futures. Okay, Oliver, what are you watching to start the week?
Well, there's a lot going on to start the week, and I just think it's nice to see a little bit of choppiness. I think from a trader's perspective, it's offering a lot of greater shorter-term opportunities on both sides of the market. Corn, we're still pretty constructive on. We had a nice bullish reversal on Thursday. We couldn't really get any follow-through on Friday, which was a disappointment, but here we are starting the week on solid ground and taking out those Thursday highs, and I think the upside potential is still there for a little bit higher price action, looking at 413 to 416. That was the breakdown point from last week. I think that might be a little bit of a hurdle this week, especially heading into November option expiration. That 415 strike, there's a lot of open interest there in the corn calls and puts. And on soybeans, obviously, November is a big month there. So option expiration probably going to play a role in volatility. Past that, weather in Brazil, elections. So volatility, I think, is going to continue to be a theme for the soybean market. And then this morning, to start the news, we did get a little bit of a tailwind with a flurry of flash sales. The demand has really been good for corn. I think we all know that. Soybeans, we need to see a little bit more improvement. It seems like we're starting to get to that point with these lower prices.
Well, I'm glad you mentioned that that volatility as well. I want to step off the field, if you will, for just a moment and talk interest rates, because we're 17 days and 3 hours away from a potential rate cut. What are your thoughts there?
Well, it's really interesting to see that the longer-term rates have actually rallied since the Fed cut rates. So I think the volatility is going to continue to be in that market, and be watching the economic data very closely. The economic data has been really, really strong here recently, and if that continues to be the trend, well, those rate cuts might be put on the back table.
All right. Hang on. Let's come back and talk livestock futures in just a moment. We've got Oliver Slope with us. Market Day Report continues, 7:32. Let's bring back in Oliver Slope, Blue Line Futures. All right, kind of got the question there for you. Are we triggering some long liquidation?
Well, I don't know that we're triggering a huge amount of long liquidation, but we are seeing some pressure to start the week. I think what we're looking at as far as fund positioning goes is the risk of long liquidation if the bullish fundamentals stall out. Right now, the fund's net long about 88,000 futures and options contracts in that live cattle market, and that's the largest net long position since October of last year. So a pretty hefty long position. If we get some bearish catalyst, potentially they start to sell, and that drops the market sharply lower. Do I see that happening? No, not necessarily, but the risk is still there. Ultimately, the December contract, I wouldn't be surprised to see us settle into a little bit more of a trading range, call it 184 on the downside to 189 on the top side. And in between there, I think there's tradable opportunities. Feeder cattle, I'm a little bit more worried about here in the near-term funds also. Building a net long position there, only about 7,500 contracts, which is fairly reasonable for the feeder cattle market. But if this grain market starts to really get its legs underneath it and continues to rally, I think that's going to be a headwind for feeders going forward.
All right. Now, in the last segment, we talked about flash sales. So we're talking about somewhat of a buying spree, if you will, for U.S. corn. But now let's turn that around to maybe the hog market. Different kind of buying spree in that hog market. What are we watching there?
Well, yeah, the funds have just been buying week after week and month after month for the past several months, and it's taken the prices back towards the upper end of the range and near contract highs. Do I think there's more upside potential? Potentially, but if you need to protect downside risk, I think this is an opportunity to do so, not just in the December contract, but looking out to those deferred contracts as well. Volatility relatively low, so options are a good way to put that floor underneath you and keep that upside open if you have to protect price. If funds long 85,000 futures and options contracts, that's a hefty net long position in lean hog. So as mentioned in the live cattle market, if the bullish catalyst runs out of steam and we get some bearish headlines, there's the risk of long liquidation as everyone's kind of on one side of the boat right now.
Okay, I want to throw another one out at you, and this one has already hit new record high today, and we're talking about the gold market. And when we talk about volatility and uncertainty, seems like gold kind of thrives on that. What are you watching?
I am a perma bull in the precious metal, so I love seeing gold make all-time highs. Silver really lagging the gold market, so I wouldn't be surprised to see silver maybe play a little bit of a catch-up. We closed last week at the highest level since 2012, and so if gold continues higher, I wouldn't be surprised to see silver maybe continue to run to the upside as well at a higher rate than the gold market. But ultimately, you see a trend of these central banks buying these precious metals, and I don't see that ending anytime soon, especially into the election and past that, where there's just a lot of uncertainty in the geopolitical realm.
Well, again, if you're wanting to buy some gold, can't do it through Costco right now. They're all sold out, but maybe Oliver's can hook you up on that. Oliver, thanks for your time. We'll see you back here on Thursday. Oliver Slope, Blue Line Futures. And one last note here.